Shut up and sit down.
All right, everybody, welcome back to Rebel Trading Group Podcast, episode 40. Today's date is September 12th, 2018. My name is Nathan Oliphant, and with me, as always, is the gluten-free Jason Bessing. Say hello.
The gluten-free Jason Bessing. What's going on, bro? How you doing, man?
Good.
It's Wednesday, my dude.
It is Wednesday.
My dude.
My dudes.
So, what's going on, man? How'd we do today?
I was down.
It happens. It happens.
Yeah, man.
Can't win them all, right?
Spreading it, man.
I was just barely up. I wouldn't even call it up, but let's go ahead and pop over to the market. You want to see how she did today?
Let's get it.
Dow up 27.8, call it 28 points. S&P up 1 point, and the Nasdaq down 18. Gold at 1,211, very small pop to the upside. I wouldn't even call that upside, but 0.78% on gold. We'll take it. And then we are over to the bloodbath that is cryptocurrencies. Bitcoin trading at $6,300. Cryptos are just boring, man. There's just, what happened to that? They had.
Did you see that quote I sent you? That Ethereum founder says the time for big gains in cryptos is over.
Yeah, he's also the same one that said they all go through cycles. Each one each spectacle more impressive than its previous, and this is just part of the thing. And I don't know, man. Anytime an article can be released on that kind of stuff, they'll write about it.
Yeah, look up that article.
But anyway, let's go ahead and pop over to you. What's going on in market news?
I don't know, man. We don't got much going on. Elon Musk, did we talk about that? Smoking weed and stuff?
Oh, yeah. He went on somebody else's podcast, not ours. That's later. Went on somebody else's podcast and drank a little whiskey and smoked a little dope.
I didn't smoke a little dope. He took like a little bitch hit. I'm sorry.
He took a bitch hit in a place where it's legal.
He inhaled. It doesn't matter.
I'll give you my 2 cents. I don't give a rat's ass what that guy does. Whatever he puts into his body is his choice. If he's a heroin addict, all right, cool, whatever. He's still the smartest man ever. Let him do what he wants.
Mm-hmm.
But I guess at the same time, it is irresponsible for a CEO to be doing it in a public venue, but I don't know. It's up for debate. I think everybody should just let it go.
Here's this article. You can see it on the screen right now. Mohammed El-Iran, and then it's colon. Crypto is not dead. He thinks cryptocurrency is here to stay, just not as a functional currency. Oh. Interesting.
Who said that?
I don't know. Some guy. Mohammed El-Iran. I don't know. He's probably someone important, and I'm fucking up his name really bad. I don't see much else. We have a storm coming.
Oh, yeah.
Someone once had the speculative theory of buying, like, Caterpillar stock.
Rebuilding companies?
Yeah.
Yeah.
During,
that was a good play. Sorry.
Go ahead. During times of, like, hurricane stuff, like Hurricane Irma. He bought, like, a bunch of Caterpillar stock, and the fucking Caterpillar stock's, like, fucking soaring.
Yeah, United Rentals was a big one. A lot of those industrial companies that we talked about.
So, I'm not saying if you're looking to play the storm, maybe look to that.
It could be an opportunity to get into some insurance companies a little cheaper, if that's your forte.
Right.
Because there'll be a sell-off of the exaggeration of what actually happens, and deep down, these companies are prepared for these storms, so...
Usually disasters to, like, the nation, I feel like, I don't know, not every time. There was one time, I think, like, after Orlando's shooting, you said the stock market's going to go down tomorrow as a result of this. And the stock market did end up going down. Like, I don't know, like, if that, like, happens, like, after every disaster. Like, obviously, I think I read an article or a headline that said the New York Stock Exchange, like, closed for a week after 9/11.
Yeah, no, I think it just closed... for about 2 days, and then the second it opened, it crashed. And then came popping up about the next week as if it had never happened.
Yeah.
You ever seen? I don't know if you've watched it yet. There's a show on Showtime called Billions.
You've talked about it.
Yeah, there's basically the guy, the big hedge fund manager. He gets rich because his hedge fund that he was working for was in one of the towers, and he was at his lawyer's office going through his separation package because they were firing him, and because he wasn't in the office, the whole fund collapsed, and he got the chance to take it all over, and shorted the banks in the shorted the airlines in the international markets, and became a multi-billionaire. Took over everything. It's very controversial, but kind of cool. Kind of cool how they tie that into the story. So, sad day.
Other than that, the Dow's trading flat for its week. I like that.
Yeah, a little boring. Not much going on.
It's news. Yeah, just watch tariffs. Trump.
The biggest drivers are just technology, up and down, up and down, up and down.
Yeah, I don't really know what's happening with that right now on the Hill.
I'm sure we'll hear about it.
I don't know what the progress is on it.
Cool. All right. Well, you want to head over to our market terminology?
Let's get it.
All right. I've got an interesting one here today. Because we talked about REITs last time, today I want to talk funds from operations. And are you familiar with the funds from operations?
I sure am.
Yeah. So I'm going to give the Investopedia definition so that way I don't butcher it.
That's fine.
Very simply, funds from operations refers to the figure used by real estate investment trusts, REITs, to define cash flow from their operations. So it basically takes into account everything between what they pay for insurance, their taxes, depreciation, expenses, and it also takes in the cash flow that they get from it. And it's very simply a lot like earnings per share. But REITs are a little bit different because they have so many more factors to put in, and they're structured as a business differently. Rather than having earnings, everything's measured in their revenue and their cash flow. That's how these companies are evaluated and analyzed and broken down and priced accordingly, is on how much money they're able to generate. It's not necessarily how much they're growing or the new products they're coming out with, and they shut down this factory because it operates as a different industry. And because of that, they measure their revenue against their cash flow. How much are they bringing in versus how much are they losing? And that's funds from an operation. And it's REIT specific.
That's really cool. We just talked about REITs, didn't we?
Yeah, that's kind of why I wanted to bring it up. It's a different metric. That
so what's a good number for compared to do you have an example?
Let's see. Example. I can read the one that they got here. Popular Mall REIT Simon Property Group reported funds from operations on 2017 of $4 billion. Firm's net income totaled $2.2 billion and arrived at the FFO. So basically, it's not really broken down into per share. Well, it is. Here they have it in a diluted EPS figure of $6.24. So I don't know what would be necessarily a good number per se to hit this number is what you're looking for. With a real estate company, I'd want at least a 10% generation on whatever the share's value is. It's kind of what I would want at least. If that money was able to kick back 10%, if you took in the funds from operation and accounted the dividends and what you were getting back versus what you have in there, but you had a lower EPS. But anyway.
All right.
If you have any questions, comments, concerns, suggestions, insults, or corrections, email us at Rebel Trading Group with 2 G's, rebeltradinggroup@gmail.com. And if you ever have questions about what something means, or I don't explain it well enough, you want to get your own, you want to put your eyes onto it, I definitely recommend Investopedia.com.
Oh, I got it up right now.
Great. They're great. I'm actually going to put the link right here.
I can give it to you. I can put the link.
I copy and paste, but I'm just going to put it in the show notes so that you guys can look at it if you're at all interested. And there's even a little video that breaks it all down and shows you how it works in a visual form. So
let's get it started. What are we talking about, Jason?
we have section number 4, part number 4 of our sector series.
Sector series.
So we're doing the sector series. This is part 4, episode 4 of it. We've done, last time we did real estate. Before that we did industrials, and before that we did consumer discretionary. Remember, the S&P is broken down into 11 sectors, and arguably within that are different subsectors or industries, however you want to put it. And it simply put, like XLI had aerospace and defense stocks in there, as well as some light bulb companies.
Hey, it had a light bulb company. Yeah, it had a couple light bulb companies.
So, but it's all industrial. So today we want to talk something that's a little bit more spicy. And we're going to talk the mega multi-billion-dollar, trillion-dollar greedy assholes in the oil industry. And we're going to talk the energy sector today. Nathan, what's the give me the fun for that one.
The ticker symbol is XLE.
All right. XLE is the most popular, commonly traded ETF of that sector. And within that, it holds a group of energy companies. And can you give us the top 5 to 10 holdings to kind of give us a brief overview? Actually, you know what? I'm watching you on Twitch. Let me pull that up.
Okay. But
while you're doing that.
All right.
Number one's got to be Exxon. Am I right?
Yeah.
Got it.
Yeah, with 23% coming in hot. Huge bubble on the map. Exxon Mobil. Rex Tillerson has got the biggest girth on this fucking ETF. Look at that thing. Okay, that's Rex Tillerson dick right there. All right, next is Chevron. Everybody heard of them? Schlumberger.
Schlumberger. They're an oil company.
ConocoPhillips. Everybody's heard of them?
Refinery.
EOG Resources. You know who they are?
Which one is that?
EOG Resources Incorporated? EOG. I wonder who they. What is that? Occidental. Yeah, Occidental Petroleum Corp.
Valero.
Phillips 66. Marathon.
Ooh, we know Marathon.
Halliburton. There you go. Heard of big names. Marathon again. Wait, what? Hess? Is Hess still a thing? Short Hess. I haven't fucking seen a Hess in fucking years.
You said short Hess. I haven't seen a fucking Hess in years.
When is the last time you've seen a Hess?
Can you pull that up on a chart just out of curiosity? Can we get a Hess glance here?
How many Hesses in? I gotta look. How many Hess? How many Hess gas stations? There we go.
Short Hess.
How are they still a thing? I don't know how many stores are. It's got to be somewhere.
Well, I mean, I was gonna say, pull it up on a chart.
Oh, you want me to pull it up on a chart?
The chat.
You want me to pull it up on a chart?
What is the symbol? HES? That's stupid. You even get the other S in there? Really? I bet it's super expensive.
$65. Who the fuck? They're probably just selling oil now. That's probably what they're doing.
Pull up the 5-year.
Okay. Sorry, coach. I mean, if it's paying a dividend, you might as well buy it.
What is that dividend?
2.1. Not bad. Not bad. No PE ratio. See, that's what I'm talking about. They don't got a fucking.
That's an ugly ass 5-year, dude.
Yeah, dude. It's the last time.
She's looking ripe for a short. If I can be honest with you.
Let me see her earnings.
She doesn't even have there's no price to earnings ratio. That means there is no earnings.
Negative just 23. What are you doing, Hess?
They're losing money, dude. That's your covered call right there. Fuck.
That's expensive. What was that, 6,500 just to fucking start?
What a stupid stock. Short Hess. You heard it first from the rebels.
Dreamtown says Disney has Hess on property. Buy Hess because Mickey loves them. That's an interesting view.
Mickey will go to the best competitor he can possibly get. Trust me, there are millions of bidders trying to get in there. If anything, that's an expensive property for them.
Maybe.
Hess. Fuck out of here.
What? All right. So what else is here? Let's see what else is here. Apache. Right. You like that name? Endeavor.
All right, so let's go ahead and talk about what is the energy sector. Plain and simply, it's oil, right?
It's
oil, natural gas, exploration, drilling, refinery, shipping.
Is there any what do you call them? Solar energy in the energy sector?
Renewable energy? I'm not sure. There might be some smaller companies that are classified in that, but this is broken down by the S&P 500 companies in this sector. I mean, you can either put them in utilities or in energy, and that's something that can be confused easily because there are a lot of gas companies that provide utility, give heating and gas and power, electric, all that shit. And but those are specifically utility companies because they don't engage in the sale and production of oil. They just use oil to do utility stuff. So try not to confuse the sectors because utilities provide power and electric, but oil is how we get the gas, how it becomes gas, how the gas gets transported, and who's using the gas. Well, moves the gas to where it's going to go, to the final consumer, like Hess.
Stop.
So,
why?
What are your thoughts on that industry as a whole, the oil industry?
Okay, so does XLE move equivalently or bilaterally to the price of oil, like the way like NUG or GLD does, or more like the gold miners ETF?
If we want to pull up Morningstar, we can overlap the charts.
I'm gonna do it.
But to be quite frank, the price of oil goes up, the margins of those companies go up because they're still doing their same stuff. It's just the stuff that they're getting is now worth more. So oil companies will go up in high-priced oil environments and vice versa. The price of oil comes crashing down because there's tons of oversupply. Well, then there's clearly a humongous supply and shrinking demand. So it's all about the supply and demand of oil. And in addition to that, with the companies, the oil is just the commodity itself, the thing that they're fighting for. With the companies, they still have to hit numbers. They have to still have consumers at the end of the day or other businesses to push that product too. So they still have sales and expansion to go through in addition to obtaining the oil. Companies will move as a whole with them, but
what's the ticker symbol for the oil?
Oil futures?
Is that what it is?
Can you overlay it with USO?
Is that what that is? Yeah. That's they track the oil, right? The oil price of oil, the strike price of oil. Bum, 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 bum. 1478. Nice, good to know. Alright, I did a 5-year for XLE. Oh, this does not match.
Doesn't match very well.
I'll show you. You can look. Yeah, 5-year does not look. Wait, is it? Did I do the 5-year? I did the 10-year. Let's try the 5-year. Okay, so it kind of looks the same. Yeah, I would say sort of. I wouldn't say it's done better. It's done better than the actual price of oil, but it does have a sort of trend to it. I wonder if I can print screen both of them. paste them onto the same one and make the opacity of one picture softer or lighter than the other one.
Oh, and go back. If you look at that chart, I was wondering what you were doing. If you just above, okay, go over to where it says 2014.
Okay.
And then if you scroll up above that, it says compare to symbol.
Oh, shit tits. Okay, cool.
Yeah, you can just type that in.
So what is this? What am I on right now? This is XLE, so I want USO.
Correct.
Whoa! So it kind of moves the same way.
Beautiful, isn't it?
Like, yeah, look, you can see like sharp movements like trending the same way and movements up the same way.
Mm-hmm.
Down movements the same, and then sort of up movements the same. And I'm sure you get like good earnings seasons right here.
The trends are going. Yeah.
You like that?
I do like that. If I can be quite frank with you, absolutely. I don't see why that
analysis on Rebel
should be a shock to anybody.
You can't get that anywhere else for this price.
Well, not any. See, the thing I love about this sector is it's commodity based, and if I'm not mistaken, it's the only commodity based sector in the S&P 500, and that's what makes it very unique. Is because everything that these companies rely on is the price of oil, and oil, no matter how bad the economy gets globally, it's always going to be in demand. So there's always like a safe haven within oil. Now, oil prices will fluctuate. They can go rapidly. I remember in 2008, I started driving and gas was like $4.20 a gallon.
Jesus fuck.
So, yeah, it's tied to the price of oil. So there's always some sort of safety.
Okay, if you're ExxonMobil, you've got oil, right?
Yeah,
you're hoarding oil.
Yeah, they have it all. They have it in reserves.
So like you're just like you with the price of gold, and the gold mining companies, they move with the price of the commodity they own.
Mm-hmm.
That's so cool, dude.
It's very cool, and that's why I like commodity-based companies, and that's why I like gold funds, because there's always some sort of residual value. Now, the market will price oil, the market will price gold, but there's always some sort of residual value there. Now, there's not any sort of residual value in Rite Aid. You know, there's not any residual value. Hell, in Google or Amazon. Maybe they're real estate, but that's about it. But these people hold a physical product that people need to function society. And that's why I like energy as an overall sector. I also like it because it's another one of those sectors that's humongous cash flows. They have trouble growing. Like Exxon already grew, exploded, and now it's just kind of huge. It's just
massive.
It's massive.
Dow Jones, baby.
And
I've made a lot of money on Exxon. That's kind of like got me started into like expanding into more advanced options. Was getting the capital. I played an option on that and got me a fuck ton of money.
There you go.
Played it 25 on black.
It all worked out in your favor.
Yeah, baby.
But because of those big cash flows and that lack of expansion, just like REITs, what do we have?
What do you
mean? Big dividends.
Oh, yeah.
We got big dividends in the energy sector. What's the overall dividend yield on XLE?
I can look for you real quick.
I mean, if you were just to hold a fund of a basket of these companies, you're still getting it. I imagine is a 3% strong yield.
2.65.
There you go. I mean, that's strong for an ETF. But if you actually go into those companies, isn't Exxon somewhere near 5%? Same with.
I think so. Yeah, it's pretty high.
Same with Chevron.
They got a fuck ton of money.
They have cash flows.
I wonder what ExxonMobil's PE ratio is.
They truly reward shareholders. It's one of those industries that can really reward shareholders.
That's 16.9 PE, so what is that? I'll just fucking look at the earnings. It's $1. Close to about like $1, running around $1 earnings per share. Oh yeah, that's $4 earnings per share.
It's not bad. What's that, Exxon? What's the dividend?
Oh, fuck me. That's what I came here to look at.
Yeah.
Dumbass.
Fuck you.
3.6.
Dude, that's for a blue chip company, what, 200 bill?
350.
Oh,
Massive.
massive.
So many shares. Can you fathom that many shares? That's a lot of float, baby.
I can't. That's billions.
Lots of shares, baby. How much volume was there today?
She's a Dow player. There's several of these guys are Dow players. And if you give me a second, I'll actually pull up each and every one of them. But that's pretty much the reason why I love it.
Because it's tied to the commodity?
It's tied to the commodity, and oil goes up and down and up and down and up and down. And those companies go up and down and up and down. But they will never just break the floor and go to zero because, Tesla put us all out of business. No.
Here's what I like. I like it because it's attached, and now that I'm like realizing this, and I'm coming to this, I like it because it's attached to the commodity as well, and it moves trendingly to the price of oil, and I like oil as like a commodity.
It's one of my favorites.
Yeah, it's
that and gold.
Fucking blood, black blood. But like it's not just the price of oil. So like the price of oil could like tank severely. But like you got the companies that still do like well, like Exxon Mobil holding the ETF up. Exxon Mobil's holding the whole ETF up and saying, "Come on, guys, we got this. Here, take some of my cash flow. Take some of my $350 billion."
I'm about it.
I like it.
I'm about it. I like it as it can be very diverse in anybody's portfolio. This can be a good trading stock. This can be a good investing stock. This can even be a good swing trade stock. When the price of oil goes from 68 to 74, that's a pretty good move because it's, very channel bound because it is a commodity. It's a good move, though, and you can get a lot of good exposure in short term, quick term, or you can hold these companies long term, do some sort of dividend reinvestment, and
drip it, baby.
Just drip it because these are very strong companies. They have a very global presence. So it's diverse in the sense that it's not all tied to the U.S. mostly, but there are global operations, and I like it long term, short term, or as a trade. Where is she sitting right now? Of the three of those types, where would XLE fall into that category? Would that be a...
Where would I put it?
Like looking at the chart right now.
Where would I put
XLE.
it?
Yeah.
I'm going to lower the time frequency. I don't know. Probably long term.
I think it's a long-term hold.
Yeah, baby, just fucking load up on XLE. You're loading up on oil.
She was a little sideways.
Yeah.
Now, we do know that a recession is coming. Like, that's kind of a fact, right? How aggressive it's going to be, how
bloody
hard it's going to be, how bloody it's going to get. We don't really know for a fact, for sure.
What are you doing, Jason?
Well, what do you think would happen to XLE if we hit a recession? No financial crisis. Let's pretend the financial crisis won't happen again. But let's just say there's a little recession because the Fed is raising rates. This isn't new to anybody. What do you think happens to this? Or even better yet, can you backtest this against what has happened?
You mean like in 2008 and stuff?
2008, 2000?
I think 2000 was a fluke. Here's the thing, and let's just not say we don't make mistakes over and over again. How big of a recession is going to be the huge test of how we learned from our lessons in the past? Because 2008 was pretty bad.
2008 was horrible. 2008 is horrible. Absolutely, we definitely.
How bad was 2000? I'm not really sure.
Well, 2000, we were definitely younger, and a lot of it was based off the tech bubble. Right. But a lot of people lost money because of that tech bubble, that dot-com boom. A lot of wealth was created left and right.
And what did we learn from that then?
I mean, was it Bernanke or Greenspan? I think it was Greenspan called it irrational exuberance.
Yeah.
That companies with no valuations and Peasley talks about it in his book. Everybody's like, "This is the new type of investing. You're missing out. These companies are new and they have different evaluations.
Almost
Don't
like
miss
Bitcoin.
out." And that's exactly what happened with Bitcoin. Those are bubbles. Those aren't necessarily recessions. What do you think happens to the price of oil in a recession? I think it goes up.
Well, let's check. Okay, we got to do 10 years. Forgot that was 10 years ago. God, we got to go maximum because we want to see what
Dude, we were in high school. We were in economics class and this shit was going down.
Price tanked.
The price of oil?
Yes, sir.
The price of the price of oil went up, but 2008,
The price of oil went down.
Everything was coming down.
The price of oil went down.
Price of oil went down. 2008.
Yes.
What was it at per barrel?
I don't know. I'm looking at USO.
USO.
So USO was hitting around. It's not really giving me a good date. I can't really see.
You know what's funny? I actually have an article right.
12/31 here, 11/28/10. Here's the dates. The 9/30. It's coming up. It was about 10 years ago when it happened. It fucking dropped down from. Let's see. It hit its highs of 113 and then hit its lows later in the year of 27.
Interesting. Yeah, I actually have an article right here. I don't know if I care to read it or just read it on this podcast, but maybe I'll share it. But the headline, you just read the effect of the coming recession on oil prices, and there's a lot of, he's back testing a lot of everything and just talking about the demands and not necessarily. I don't know. What do you think of oil as like a straight up like futures commodity or even like a triple leveraged ETF play?
Ooh, I don't know about that, man.
Like, do you buy the dips, sell the rips on that?
I don't know if it's like
so
that.
Channel bound.
I don't know if is it that volatile? I don't know.
Well, it's not volatile. Much like the price of gold, it's channel bound. It's between 12 and 12.40. It's not much at all. And oil is between, I would say, 62 and 78 within a year. Like, not huge swings, but like when it moves up $3 per barrel and you're on a triple leverage ETF of that, that's a different ballgame.
Why are there so many fucking choices to look at fucking oil? I just want like oil.
Because it's one of, if not the most popularly traded future.
So what's the difference between like WTI crude, Brent crude, Mars US, OPEC basket, Urals,
I think
Louisiana Light? Sounds like
it's
beer.
How it's refined. Yeah, it's like
Bonnie Light, Mexican basket oil. Natural gas. Are you kidding me, dude? This is fucking like Budweiser should start investing in oil companies and oil itself and start selling it out of the can. It'd be great. Brent crude. Could you imagine that in a Bud Light commercial?
No. If I'm not mistaken, it's how it's refined, and it's also the use that it's going to be for. Whether it's going to go to diesel,
what is Bonnie Light
jet
used
fuel,
for? Do you know?
Rocket fuel. If it is natural gas.
Now I'm interested in like all these different types.
Yeah, it's a whole different world. To be honest, I haven't touched it because it's on my list of things to do like within the next 3 years. My like 3-year short-term bucket list, and one of them is to explore the oil industry, learn a little bit more about the futures and about like the different types. And there's a lot of reports.
Okay.
For example, every week we have inventory numbers, oil inventory numbers, in which OPEC, which is the global oil production community, OPEC will basically report how many millions of barrels they have. And if inventories are up, then supply is high, oil will come down, and vice versa. If inventories have fallen, demand is up. So that's like one of the key ratios that every oil trader always watches. And that report comes out, if I'm not mistaken, every week. I definitely know it's every month.
When do we buy oil?
I like oil companies. That way you can get a little dividend. I'm not just a fan of holding oil. I'm even not a fan of the futures contracts. I'm a fan of
Louisiana Light. I can't believe there's like fucking oils called like they just sound like just like fucking beer names. Like you can get the imported ones, the Indian Basket, or the Western Canadian Select. I'm dying here.
Yeah, it's different. It's very different. Only some of those are traded on our exchange, and like I said, it's the reason it's on one of my bucket lists is because it is a huge industry, and it's
Wikipedia.
It's a little
got him.
It's a little complex. So I will be doing that one day, hopefully. But until then, I'm either about trading oil or holding long-term oil companies with those dividends. Because I'm a dividend queen.
This guy, he called me out for going straight to Wikipedia about Bonnie Light oil. It just sounds funny. I'm sorry, I had to look it up. I have no idea. I don't know anything about oil. Did you know what Bonnie Light is, or any kind of these? I don't know. I feel like I don't know. I don't think I would actually trade futures on commodities like that. That'd be cool too. I don't know. It'd be cool too.
Bonnie Light oil,
right?
You gotta trade them Bonnie Light oil.
Apparently, according to Wikipedia, excuse me.
Hey, whatever, man. You're learning.
Yeah,
it's a learning experience.
According to Wikipedia, it's like oil that comes out of Nigeria, and it's like super.
Yeah, I trust
on
that.
Light on the work of machines, I guess. I don't know.
Hey, hold on a sec.
Taking an MCD thirst break. Ticker symbol MCD. Exactly. Give me some of that. We're going to make t-shirts that say Bonnie Light, and it's going to be on like a beer can. And we're going to start selling them. We're taking $15 pre-orders right now. Email us at rebeltradinggroup@gmail.com if you're interested in buying the shirts. You hear our shirt idea?
No, sorry, my boss called me.
It's going to say Buy Bonnie Light. And it's gonna say buy on top and then Bonnie Light on the bottom or somewhere like that or on top. And it's gonna have a picture of a beer can and across it it's gonna say Bonnie Light, like Bud Light or something like that.
We can make beer shirts, like little beer shirts.
Yeah, exactly.
Thanks. Wow. Anyways, is there anything else?
We have a question on Twitch. All right, here we go. You ready for this?
Energy material companies.
Hold on. The question is, do you know any good energy material companies coming from Help Me Find My Crutches? Thank you for that question, Help Me Find My Crutches. Jason, the gluten-free Jason Bessing, do you have a response to that?
I mean, to be honest, I don't know much about, like, the industry. So, energy materials, I think, is that more specifically, like construction equipment to obtain the energy? Is that what you're... Because if so, if I had to imagine, that would be more like Halliburton.
Yeah, Halliburton's a good one.
Halliburton and maybe even Exxon, to be completely honest. Those are the two big boys, Hal and good old Zom.
I like Halliburton. Holy shit! You see the PE ratio? Maybe
she cashed out in that. She cashed out in that last war, huh?
Dude, it's fucking tanking. What the fuck? I wish I had more earnings. What are you gonna do? 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 Lots of substantial mini breaks off lately. Wait, what? I'm sorry.
No, I was just looking at your Twitch there.
Mm-hmm.
Looking at your screen. Well, do you have anything else you want to add to energy?
No. Okay. Where are you putting it in the? There's 4 sectors now that we've gone over.
So, of the 4 that we've done energy, we've done real estate, we've done consumer discretionary, and we've done industrials. And, I like to look at things with a bit longer of an outlook. So with my perspective, I think energy is a 10-plus year hold, and it's a dividend reinvestor. I like it. You've got to ride out the hard times. You're going to have to buy through the recessions and buy through the good times. But over the course of a few years, I think this is a good place to hold your money. It'll be there when you retire. I can guarantee that. I don't think there's any disruptors out there that are truly going to shut down Exxon Mobil, like Tesla or the electric car even. There's so many other uses, cruise ships and oil tankers and semi-trucks that people just don't really think of. Like, oh, Tesla's going to make all cars electric. Like, yeah, good luck. Good luck. Do you know how long it's going to take to implement that?
Did you hear his podcast? I listened to it. Or
the Joe Rogan?
I listened to the first 45 minutes.
I'm definitely going to. I'm gonna get to another level.
Yeah, we're gonna digress for a second because his first when he starts talking about the tunnels, he's like, yeah, I just dug a pit because you're not allowed to dig a pit. Who says you can't dig a pit? So we dug a pit, and then I showed I showed someone else, and I was like, hey, this is the pit. And it's for a good 10 or 5 minutes, he's saying this is the pit, and we dug a pit. It's so weird that he's like no one else can do it, but I dug a pit.
He's a weird dude.
Yeah, he's really weird.
He comes off on TV and the news to be this charismatic leader, but when it's just him, you just see he's a normal dude. He's just super smart. And anybody will write him a check.
Joe Rogan, you'll listen to the podcast, but he was asking, he was like, how do you find all the time to send rockets into space, build electric cars, have energy companies, and then build a flamethrower? And then fucking smug ass Elon Musk says, it's just the flamethrower wasn't that hard. It didn't take that long. It's not a big deal. I was like, can you just be humble for 10 minutes on this podcast? Be like, yeah, I juggle the struggles of daily life like the rest of us fucking minions around you. You know what I'm saying?
He's just a different story, but I think one good thing to come of Tesla...
Short Tesla. Fuck that.
One good thing is that it is sparking a lot of other companies to get on the EV bandwagon, so to say. Electric vehicles are possible. We know it. The problem is production isn't cheap and the batteries aren't that good. But we can fucking do it, no problem. Now, there's efficiency issues. That's the problem in it. The efficiency and performance issues of electric vehicles. And they can be overcome, but you can't do it in a publicly traded business format. So I like it. I like that he is sparking innovation and all these other big companies to go to electric vehicles.
Yeah. Okay, well, for me, I think XLE is a long-term hold for me. And I like it because I like commodities. I would hold something like this comparable to the gold miners ETF.
Because it's commodity based.
Yes. I would hold this long term. And this would be one of my favorites out of the four. Yes, so far. I like it better than real estate. I think I would buy real estate later on in my investing career. Maybe around my 30s, mid 30s. I don't know. Maybe not now. I feel like there's a timing for it.
You like it as a long-term hold, though? Would you put some of maybe this fund or some of those companies maybe in a long-term?
XLE?
Yeah.
Yeah, of course.
Would you either take XLE or maybe a couple companies out of XLE to just stock away in your 10-plus year portfolio?
Of course. Yeah, I'd put a fuck ton of it.
I'd like it.
I just index the shit out of it and just bubble out with everybody when we
just go with XLE. Just go heavy XLE.
Yeah. Are you ready for this index bubble? That's what it's gonna be.
Index bubble. What does that mean?
Wait, you haven't heard about that?
Oh, you're talking about like how because when everybody sells, then those ETFs are going to have to sell, and those mutual funds are going to have to sell. So
Yeah, everybody's gonna like chunk off. Like if the S&P's going down, they're like, well, time to fucking scoop a bunch of profits, and it's all just gonna crash one day. Momentum's gonna go, and it's just gonna go.
I think they've created too many of these funds. In the end, the people who are going to get hurt are the people who own these funds, the fund families and companies.
All right, let's wrap this up. What are you watching this week?
Oh man, you're just gonna come out the blue like that?
I can. Well, we want to wrap this up. How do you want to wrap this up, then, buddy?
No, I mean like with me, I didn't know what I was watching. I was too engulfed. But if you want to go first, I will definitely go through my list here.
Oh wow, After Hours just fucking turned off. All right, I don't know if we've said this or if I said this last time or something, but I am watching JNUG, the Junior Gold Miners.
That's one of my favorites.
Yeah.
And tell us a little bit about it and why you're bullish.
It's the Junior Gold Miners ETF that's 3x, and it's not the regular gold miners. Jason, I think you persuaded me saying then like when they move like quick. They're like the altcoins of Bitcoin. They're gonna move. I like it better, and I am also selling a covered call on it. Doing some risk mitigation strategies. I'm trying different things out. I'm down 166% on my contract.
That's funny.
Yeah, that's hilarious.
I like it.
So I'm just selling covered calls on that. It's cheap.
There's good premiums to it too.
Yeah, if it gets called away, I'll probably find like another cheaper stock and sell the covered call on it, and probably just do that for a bit.
Kind of get the feel for it until you're ready to go ham.
Maybe do a different strategy on JNUG.
I like it.
Yeah. What are you watching, baby?
Go ahead. I found an interesting stock this week, and first of all, I got to go ahead and plug FinViz. That stock screener is just great.
Isn't it sexy?
I love it because you can just go through and pick out whatever you want. So I wanted some technology company that paid a dividend that was a little lower priced. We'll get to why in a second, but I came across Nokia, and a quick glance, like if I was scrolling through, I would have laughed and said, no, I'm not touching this. But I kind of got into the fundamentals, and she's not horrible. She does have some restructuring and stuff to do. First of all, it's got a $30 billion market cap. Never would have guessed that. And I really compared it to Sprint because that was the other one I was looking at getting. But $30 billion market cap, 3.5% dividend yield, and it's a international play on 5G technology.
So Verizon just said they were going to put that out in a couple big cities. That's recent news.
It's coming out. And this would be a European play because I thought Nokia would have been like Korean. Bro, it's from Finland.
Wait, what?
Yeah, right? It's headquartered in Finland.
Oh, that's interesting.
Espoo Isma in Finland.
Is it an international stock?
It is an international ADR company.
Well, freaking what's it called? We need to start doing some international studies because Robinhood just let us it opened up international stocks. So
they sure did. They sure did. We'll do an episode on that. Maybe we'll take a break from the sector series, and we can do something like that. That'd be fun. Because there's a lot of pros and cons of the international sectors. And we'll break those down for sure. But I'm watching Nokia. She is off a strong sell-off from, I'm looking at the 3-month, down 11%. And I like to buy companies that got the shit beat out of them. And this is one of them. So I'm going to give it a whirl. I'm going to accumulate this for a little bit. And I'm going to see if it works out in my favor. One thing I don't like, Nathan, is it pays an annual dividend, either in May or June around that time. That's just a little awkward. But whatever, we'll take it. Would you rather get one fat lump sum or 4 little chunks?
I don't like Nokia.
And why?
Because you're going up against Apple.
Fuck them.
You're underneath the foot, dude. You can't.
Well, Nokia is more of a communication company these days. They've kind of restructured. They have ultra broadband networks, IP network applications, and Nokia technologies. Not so much into the phone communication or phone making industry. They're more of a wireless service provider business.
What?
Yeah. And remember, it's headquartered in Finland. This is where it's big. So I imagine they were much bigger at one point. 2002, 2003, when flip phones were going off. Dude, Nokias, you couldn't break those fucking things. And the batteries would last days. You remember that? Did you ever have one of those like cheap-ass old Nokia phones? With like snake on it?
I had one.
Bro, them batteries was the shit. So I'm going Nokia for a little while. I'm gonna watch her.
All right.
Well, we have one last question. If we can approach that.
Oh shit! What is it?
How long do you have to hold an asset before the dividend can be received? Well, they a dividend paying company. It has 3 key dates. There's the record date, the payment date, and the exit dividend date. The record date is when they say, hey, everyone who's a shareholder on this day gets one of the stocks or gets one of the dividends. But remember, it takes 3 days for a stock to settle. So you must own the stock prior to the XF date to get the dividend. So if they're going to pay a dividend on September 14th, Friday, and that's their record date. Today would have been the XF because it would have taken the 2 full days to settle, and then on the 3rd day you have it.
Yeah, I'm bringing it up right now. Kind of show you when those dates are.
Yeah, this is a good place to look at that would be the NASDAQ site.
Oh, they pay yearly? God, that's so gross. So, yeah, they got the declaration date, too.
Yeah, the declaration date is when they say, hey, we're going to pay a dividend.
They announce the dates then, too, don't they?
Yeah, they announce the dates well in advance. And so as long as you own it before that date, you'll get the dividend. Just remember that dividend will come out of the stock price. So you'll get that cash flow.
When does it come out? When does it come out?
Comes out on the XF date.
Good to know.
So.
All right. Well, let's wrap this up. Thank you guys for joining us for our podcast.
4 viewers.
All right. Well, without further ado, we will see you guys next time.